Well, it's that time again. Markets could be due for a trim before running up again. It's great to have your company for the daily. Welcome to this Thursday, June 12 report. My name is Jessica Ramir, a market strategist with Mumu. It's great to have your company as always. So the saying in markets is buy the rumor, sell the news. And it seems that this is reverberating across markets this morning because overnight we saw what we all wanted. We saw weaker than expected US inflation data tick. And the second tick was we had that preliminary US China trade agreement. A deal is done, as Trump said. Now, this news you'd think would be supportive of stocks, and it is for the long term. But we're seeing investors sell the news, and that's specifically why the S&P 500 has fallen for the first time in 4 days. It slipped ever so slightly. It's down by about 0.3%. The Nasdaq 100, which remember that's the biggest 100 tech stocks in the US, that lost a little bit more than the S&P 500. Even so, though, we still have to remember that broad underlying bullish sentiment seems intact. We've got the Nasdaq 100 up 30% from its low. Other positive risk-on indicators include the lower US dollar and lower bond yields. So the bullish narrative does seem to be intact, but we are getting signals that we should remain optimistic, but be cautious of a potential pullback. Now, the first indication of a potential pullback is a la the VIX. We call this a volatility index, measures fear and greed. And as we can see towards the right-hand side of the page, fear has fallen to one of its lowest levels that we've seen for a long time. It's so low, in fact, it's becoming eerily low. Market fear is as low as it was on March 25 and Feb 14. And guess what? On those 2 days, Feb 14, as I've been saying a lot, that was the kiss of death. And on March 25, we also saw a pullback. So all I'm saying is now things are so quiet, market volatility is so low, and the last 2 times market fear or volatility was this low, markets slipped lower. Secondly, I want you to think about this. We are seeing encouraging words from, of course, the deals with US and China. But we're starting to see jobless claims rising, and we're also starting to see concerns about US government debt rising too. Concerns about that are getting a lot louder. So this is why I'm saying you should be expecting profit taking in technology stocks, but also locally keep an eye on defense stocks today. Why is that? Well, here's a stock to look at. It's called Austal. It's Australia's biggest shipbuilder, and they're trading at record highs. So too are global defense stocks. Now, what is happening is the US is considering scrapping this deal to build submarines. They've got a deal with Australia and the UK, and now the US is saying, hey, we're looking at killing off this deal. So this is a stock that we want you to look at. It's called Austal again, but it's been trading up significantly. Look at that phenomenal gain, would you? It's up 94% this year. Well done if you invested in this stock. They've just been tapped on the shoulder to be taken over by a South Korean shipbuilder. But nevertheless, it could be due for a trim. Anyone would be due for a trim after gaining 94%. It's something for you to consider. What else? What else, Jess? Well, the Aussie share market. Let's think about that. The Aussie share market yesterday, pardon me, sorry, hit its highest level in history. But today, if the futures are correct, the Aussie share market should rise to 8,622 points. That'll be another record. But yesterday, let's get back to the history books. Yesterday was a day in history. Your grandkids might be talking about it, who knows? But yesterday, the Aussie market reached its highest level in history, as we can see on the screen. So it not only hit its highest level in history of 8,639 points, but it also closed at its highest level ever in history, 8,594 points. Thanks for coming. Thanks for coming indeed. The Aussie share market has risen 17% from its low, as we can see toward the right-hand side of the page. The Aussie share market has risen 74% from April 7. But don't forget, we did fall about 15%. So obviously, we gained more than we lost after the crash. There's lots to said about that. But I just want you to focus on this now. We've put the 3 biggest ETFs on the screen for you. If you do have exposure to those, I just want you to consider that you might see some more down days ahead. So what I'm basically saying is just beware. The market is looking a bit hot. We've got US stocks up 30%, Aussie stocks up 17% from their lows. This is happening globally as well. But going back to that fact that we started out by saying, buy the rumor, sell the news, all we're saying is markets could be due for a trim. The other evidence of this is that we saw a huge drop in bets for the market to rise to that 8,800 level in 2 weeks. So the bulls are kind of getting a bit tired, and they're basically reducing their bets. They've pulled them out, and there's been a huge increase in bets for the market to fall to 8,550 points. Now, as we can see on the screen, the market is at 8,592 points. It doesn't seem like much, so all we're basically saying is the market could fall maybe 1 or 2%. But remember, markets throughout the bull market that we're displaying on the screen, since the bull market began in October 2023, the market rose 27% across 328 days, so not even a year, and you would have made about 30%. But during that time, as we can see, there were plenty of falls along the way. The market dips were short and sharp, but the market always recovered. And I don't know if you can tell by the screen, but those pullbacks on the screen on the way up, they range between 2% to 6%, as in the market fell 2 to 6%, but it always recovered. And again, remembering the recent crash, the market fell 15%, but then it recovered 17%. So all we're saying is markets, the Aussie share market has always recovered from a crash. You should be expecting a pullback here. Remember, everyone needs a trim every now and then before they let their hair grow again. Now, investors could consider taking profits off the table if that's important to you, if you don't want to see dips in your investing portfolio, or you could consider topping up gold and maybe even Bitcoin. Why Bitcoin? Well, here's a chart of the world's biggest Bitcoin ETF. It's been trading at its highest level in history, and that's because Bitcoin is also trading at its highest level in history. Remember why this is? The US is obviously hinting that they're going to buy Bitcoin to pay back government debt. And that closes off our discussion for today, thinking about other cautionary tale for markets and other considerations is looking at gold and Bitcoin because they tend to do quite well when markets pull back. Something to consider. Thanks for your company from all of us. Have a great day. Happy trading.